Well, welcome everybody. Welcome to Reverse Mortgage Weekly, where we go over all of the ins and outs of the reverse mortgage program. This is our weekly stream that we do. We stream it live on Facebook, on YouTube, and it's all with the purpose of getting the good word out about this great program. My name is Zach Smith. I'll be your host today, your instructor, and I've been in the mortgage industry for, let's see here, next slide should tell us. I've been in the industry for 20 years now. And I started off, I went to Colorado State University and went into restaurant resort management and went right into the mortgage business naturally. When I was first started originating mortgages, oh my gosh, the programs were just incredible. Incredible in a way, not a good way. Some of the things that they were doing back then in the early 2000s, 2005, 2006, which eventually led to the mortgage crisis that we have in 2008 and 2009. A lot could be said of the same thing about the reverse mortgage. The reverse mortgage has changed quite a bit over the years. This isn't your father's reverse mortgage anymore. This is the reverse mortgage that is really been revamped by the Federal Housing Administration, FHA, and HUD. They got a little more involved, which created a lot more protections for folks. So let's go ahead and enough about me. Let's talk about the program now. So what are we going to go over in this presentation? Well, we're going to go over who our typical clients are that we see with the reverse mortgage. Reverse mortgage is a great option for several people. It's not like a specific type of client. Well, specific type, sorry, I'm just fixing my camera here. A specific in the sense that there is an age requirement. But in my opinion, it's a great program for anybody who wants to look at using home equity as part of their retirement plan. Myself, as soon as I am eligible to get a reverse mortgage, I am going to run down to the bank and get one. It's just part of my retirement plan, and I've just seen it work out so well for a lot of my clients. So we're also going to go over what a reverse mortgage is, what a reverse mortgage is not. There's a lot of mixed information out there. Some of the stuff that we hear sometimes is just a little crazy. The two biggest myths that I generally hear with the reverse mortgage is one, you lose title to your house, that the bank owns your house. That is just a silly notion. The reverse mortgage is really just like any other mortgage. In fact, you can treat it just like any other mortgage. A lot of folks, the other misconception is that you're going to go upside down on your property. It's possible for you to go upside down on your property, but it's really a choice. The reverse mortgage doesn't eliminate your mortgage payment. It makes it optional. So if you want to make a mortgage payment with a reverse mortgage, you certainly can. Most of my clients choose not to, especially when you look at, amortization schedules. And I just taught a class for real estate agents yesterday in regards to the simple interest loans. And, talking about amortized loans, people refinance into, they need cash or something like that, and they refinance into a 30-year fixed. Well, you're paying 50% of the interest on that loan in the first 10 years on a 30-year note. So a lot of times those type of things, people start thinking about this. Well, I need cash in retirement. I have equity. Let me go ahead and get a line of credit, or let me get a 30-year fixed mortgage and just take cash out. There's a couple of things going on with that. One, you have a required monthly payment, so they're going to be knocking at your door every month. Hey, where's our money? Number two, you're going to get locked into an amortization schedule where you're paying mostly interest. On a like $600,000 loan. I'm not saying that's what type of loan you'd take out or whatever, but on a $600,000 note, your mortgage payment's going to be about $3,600 in a low 6% rate. Well, out of that $3,600 that you're paying, only $600 of it in those first few years is going towards paying off the loan. So you're basically just taking your hard-earned retirement, hard-earned money, and handing it right over to the bank. But so a lot of our clients, that choose a reverse mortgage say, well, to heck with that. I'm going to choose to take that money I would normally be making with my monthly payment, just put it in my pocket instead. and reinvest it, put it into your savings, whatever. We'll go over a lot of examples here today. We only spent about 30 minutes together. So if you have more questions, you can always reach me at chariotreverse.com or happyhousetoday.com. Let's get on with it here. We're also going to talk about why people are choosing this as an option. And then we're going to go over a high-level overview of how they actually work. So what are typical clients that we see with the reverse mortgage program? Well, generally, they're older adults that are looking for an increase in cash flow. One of the unfortunate things is that as we age, sometimes we just don't want to work as much as we used to. I had a client a year ago. She was a florist in one of the local King Soopers here, one of the local grocery stores. And she said to me, she's a florist. So, I'm just trying to be, local friendly mortgage guy, sit down and get to know my clients a little bit. And I said, oh, you must really enjoy your work. Boy, she looked me dead in the eye and she said, I hate it. I hate it. Because during this time, she was considered an essential employee. So during the dark days of COVID, she had to go into work every day and she was terrified. But she figured out a way to survive, put herself together every day, go out and go to work. Well, the thing is that she felt she had to do that because she had somewhat of a large mortgage payment for her anyways. I think it's around $1,400 or something like that. And she couldn't afford to retire. This is a big issue that a lot of Americans are dealing with right now, which is one of the reasons why we're so passionate about this program. So she felt like she didn't have any other options, like she couldn't retire. So what we ended up doing was converting her current loan into a payment optional reverse mortgage. So now she has the option. If she wants to make that $1,400 a month payment, she can. But if she wants to just say, you know what, I'm just going to let that payment that's not exactly the amount, the payment that will stack up each month, but she can just let the payment just accumulate on the loan balance. Well, what does that do for her? Well, it changes her life. That's what it does. And the reason I say that is that now she doesn't have to work. She can live off her retirement comfortably. It's like giving yourself a raise. It's like having another $1,400 in savings or basically income or cash flow, basically, each month. Sorry, I put that on mute there. But so that was it's an eye-opening experience when you experience that type of closing, when people are weeping at closing because this program has changed their lives. Secondly, older adults that are in need of relief from high monthly payments from debts like a mortgage loan, like the example I just gave, credit card debt, car payments, medical bills, kids' tuition, the bills go on and on and on. And it's kind of like right now, we talk with all the experts and they're saying, oh, everything's fine. Don't pay no attention to the man behind the curtain. Everything's fine, but there's kind of like a quiet storm, I think, of credit card debt out there right now. The people are starting to get stretched a little bit. And boy, those interest rates on the credit cards some of them are pushing 30%. I mean, that's just, it's kind of crazy, but we're Americans. We love to spend money. And, that's kind of the position we've put ourselves in some cases. So anyways, the other folks that we work with, that we typically see, again, we work with everybody, but folks that we typically see are folks who are looking to establish a safety net for their assets. One of the largest issues that a lot of financial planners deal with is basically trying to plan for your retirement. We used to plan until, your 70s. Then they started planning into the 80s. Now they start planning to the 90s and the hundreds. So your nest egg becomes vitally important because we don't know how long we're going to need it. You may live till you're 70 years old. You may live till you're 100 years old. Well, the difference between 70 and 100 is 30 years that you'd have to plan for. So there's a big fear of running out of funds prematurely, and it's a real concern. We see it every day. We see it every day in our society. So the reverse mortgage can basically create a safety net in the form of a line of credit so that people don't have to reach into their nest egg to pull money out. They can basically reach into that line of credit. So again, we're going to go over all this stuff here in just a moment as well. And anybody on the webinar right now, if you have questions, go ahead and just raise your hand in the chat, and we'll answer your questions. This is a like a town hall style, so it's just not me barking at you. You know, you can also ask questions. So please feel free to do that. So what is a reverse mortgage? There's a lot of information out there about these programs. Some of it's good, some of it is not very good. So it is a mortgage loan. So there's a deed against the property, a lien against the property. It's got monthly payments. There are monthly payments with a reverse mortgage. Again, that's a big misconception. You know, there was a big company out there with their big celebrity advertisers that got sued by the Federal Trade Commission because they're out there saying, hey, you know, we're going to eliminate your mortgage payment. You don't have a mortgage payment any longer. Well, it's a little bit misleading. I mean, technically to the consumer, if you have an optional payment and you say, to heck with this, I'm not going to pay it anymore, your mortgage is no longer there. You're eliminated that, but you still have a monthly payment. It's just optional now. So that payment is going to go on top of the loan each month if you choose not to make it. So generally, the reverse mortgage has a line of credit. Also, you could get a cash payout. So we got a guy in a black suit with a suitcase full of cash. It's handcuffed to his wrist. That just comes into closing and hands you a big suitcase full of cash. I'm just kidding. They don't do that, but they basically just wire the funds right into your bank account. And then also you have a tenured payment option as well. The tenured payment is basically like turning your house into an annuity where it pays you back each month. So what a reverse mortgage is not. So a reverse mortgage is not a government takeover of your home. You know, I've been in the industry for a long time. You know, I when I first started, I was doing, working with, a home builder, and then 2008 hit, rug got swept out from under everybody, lost my job, and ended up working in the loss mitigation department at Chase, JP Morgan Chase. And back then, you know, I was helping people trying to stay in their homes, you know, with modifications. And really, it was kind of a mission. You know, people were hurting and they needed help. And you know, I applaud Chase for opening up their home ownership centers back then, because back then, you know, if you were trying to save your house, they'd tell you, okay, put together this big stack of paperwork and send it in to this address or send it in to this person, and we'll take a look at it. Well, people would put together these big stacks of paperwork, and then they'd send them into the bank, and it'd go to a black hole. No one knew where it went. So Chase home ownership centers, you can come in face to face, talk with a guy like me. We're able to stop foreclosures, get modifications. It was great, but it wasn't great, but it was great to be able to help and not be on the sidelines. So back then there was a sentiment that the bank wanted your house, that they're trying to foreclose. They want your house. The bank does not want your house. The government's not trying to take over your home. They don't want the real estate. The real estate's a big problem for them, actually. So it's not a government takeover of your home. It's not a way to make you upside down on your house. And again, if you go upside down with a reverse mortgage, that is really a choice. You can still make monthly payments just like you do any other loan. It's just that you're not required to make that monthly payment. So it's not a way to make you go upside down. Can you go upside down? Yes. It's for instance, with my situation, if I go upside down, I'm going to be completely fine with it. In fact, I almost expect to go upside down when I take my reverse mortgage out. It's actually part of my plan. You know, my plan is really to pass on a little more equity, or a little more net worth, not so much more equity. So, and it's not a payment-free mortgage. You know, again, I won't mention them by name. You know, I don't want to get a lawsuit or anything. But it's not a payment-free mortgage. You know, big companies out there, oh, we're gonna, eliminate your mortgage payments. You still have a payment. It's just optional. So, why are folks choosing this option in retirement? This has been such a life changing event for a lot of my clients. And so, why are people choosing this? Why is it something that people are choosing? Well, in my opinion, it's simple. It's liquidity is the biggest thing that people need in retirement, and long-term financial planning as well. So liquidity is probably the biggest reason people look at the reverse mortgage. It's kind of like that saying, being equity rich and cash poor. Well, that's a lot of Americans right now. A lot of Americans either own their home free and clear, or they have a really low balance on their home, but they have a lot of equity in their property. That's great, right? Well, equity is a lot like having a glass coffee table right in the middle of your living room that's full of cash that you can't get to. So, it's not like we can take a picture of our house and go down to the grocery store and pay for our groceries. So having equity is great, but the problem with equity in retirement is that you have all that cash, but you can't get to it. So it creates a situation where if you are equity rich and cash poor, you're in this, your home that you've lived in for several years, eating bologna sandwiches every day because you're not able to afford the things that you could because you're not working as much as you did when you were younger. So that can create a big issue. Um, so again, equity is great, but it's just not. It doesn't do anything for you in retirement. It's just like when people go out and pay for a property cash. Of course, I'm a little bit biased. I'm in the industry. I basically my job is to help people get money for real estate. So yes, of course, the mortgage guy is going to tell you it's a good idea to borrow funds. So I get that. But I really do think it is, it's the whole Robert Kiyosaki thing, there's good debt and bad debt, and for instance, if you want to buy a $300,000 house and you don't want a mortgage payment, and traditionally what you would do is say, okay, well, I got $300,000 from the sale of my old house. I'll just put it all into the mortgage. Well, I just had this example, and this borrower did not take my advice when he did this, but I just had a situation where this happened. The guy bought the house cash, and then he had some dental work that came up. And he was like, well, what are my options? I don't have enough money. I just bought this house. So that's why we're working on his mortgage, is because now he needs to, I had advised him to, well, you ought to purchase the house with a reverse mortgage, because then you can stay more liquid. So for example, that $300,000 that you put down cash, you don't want a mortgage payment. Once you put that into the property, you don't have any control over it. You just hand it over, that money, to either the bank or a buyer. And why do I say that? Well, it's because if you want to get that money back out, you got to sell the property. So got to find a buyer, or you got to go to the bank. You got to call Chariot Financial and get a loan out. So the philosophy is that, instead of putting $300,000 cash down, and I'm just using rough figures. Everybody's situation is going to be different. These programs are based on your age, depending on how much you can take out. So I'm just using rough figures here. But let's say you have a $300,000 purchase. We would come to the table with, say, $150,000. You would come to the table with $150,000. So you put $150,000 into the transaction. We put $150,000 into the transaction. Now you've bought your house. You have $150,000 cash sitting in the bank, and you don't have to worry about making a mortgage payment for the rest of your life. So you accomplish the same thing, but now you got $150,000 cash in the bank. Now you can direct it. You can reinvest it. You can put it in a savings account. You can, go out and buy a Lamborghini. You can do whatever you want. But the point I'm making is that now you have 100% control over those funds. Whereas if you put it into the property, you don't have that control anymore. You're basically handing that control over to a bank or a buyer. So that's part of the philosophy of the reverse mortgage and how it works for a lot of people. So why does equity and liquidity matter in retirement? Well, the big reason is most retirees are on a fixed income and have limited cash flow. So it's my assertion that if you're over 62, you should no longer be making a mortgage payment any longer. Because if you are making a mortgage payment after you're 62, you're either taking it from your cash flow, which can be limited, or you're taking it from your life savings. Another example of this program helping someone out was, we had a borrower that we worked with a few years ago, and she had lost her husband a few years prior, and she had a very small life savings. I think she had like $12,000 in the bank. Her mortgage payment was about $1,000 per month. She didn't have very much as far as fixed income. So what was she doing? She was taking money out of her life savings. This is supposed to last her the rest of her life. She's taking money out of that account so that she can pay her mortgage. She did not want to move to assisted living and talk about burning through retirement funds. I mean, my gosh, some of those assisted living places are upwards of 10, 12,000 a month. So she basically was depleting her life savings so that she could stay in the home that she wanted to live out the rest of her days in. So what we did was we converted her first mortgage into a payment optional reverse mortgage. And what did that do? That eased up. So now she has an optional payment of basically she can make that monthly payment if she wants, or she can basically say, you know what, I'm just going to let the balance grow over time and not make that monthly payment. Well, by doing that, she has an extra $1,000. So now instead of the funds coming out of savings and into the mortgage, and again, keep in mind these mortgage payments, most of that $1,000 that she's paying, only a fraction of it is going to pay off her loan. She's basically taking her life savings, her retirement, and handing it over to the bank so that the bank can profit. So by flipping it to a reverse mortgage, she's able now to go the other way. Now she's got enough money to put in savings each month. So the cash flow issue is a big deal when it comes to retirement. And just have a cup of coffee with any financial planner, and they will talk your ear off about this stuff because it is serious stuff. This is stuff that people are dealing with, Americans are dealing with on a monthly basis. Most people, they don't want to work into their 60s, into their 70s. It's been a great pleasure and a very humbling experience to work with older adults. And one of the reasons is you really get to find out what the important things are in life, because a lot of my clients that I work with, they're not so much worried about how much money. I mean, finances are a concern sometimes, but what they want to do in retirement is they want to work on their passions. They want to work on their art. They want to work on, serving others. They want to do those type of things. So very little people want to work into their 60s and into their 70s. Although, they say sales people like myself, we don't retire. We just fade away. Also unforeseen medical costs, just exactly like the example I gave with the fella that had some dental work. He put all the money into the transaction and had a dental situation come up. He needed cash. So, of course, we can still help him out. We're still able to get him a loan and all that good stuff and, pull out the line of credit. But he could have had all of that figured out from the get-go. So that's why these things are important in retirement. So, the reverse mortgage basically solves the problem of liquidity. So the reverse mortgage is designed to help older adults that need access that equity when you need it. So, that glass coffee table sitting in the middle of your living room full of cash, oh, I've got all this equity. Isn't that great? Look at all of it there. But it doesn't do you any good. You can't get to it. Well, the reverse mortgage basically just installs a little drawer. You need cash out of that coffee table. You just take it. If you don't need it, you put it back. It's a beautiful program that works out for a lot of folks. Now, how it works is they will establish that a line of credit. So that's basically how they convert that equity into cash, or they will show up with a cash payment. Or you can turn your house into like an annuity and do a tenured payment is what they call it. Okay, so let's move on here. So the reverse mortgage is a financial planning tool. This is by far the what is not talked about enough when it comes to the reverse mortgage program. This is a great retirement tool, and those aren't my words. Those are words of folks who have done who are probably a little smarter than I am when it comes to the retirement game. We're talking about folks at Texas Tech University, at Saks and Saks. In fact, this next slide shows some studies that were done that talk about home equity and its use in retirement. So, for example, all of these graphs show, and this is basically trying to figure out what the survivability rate of people's assets are. Again, that's one of the number one concerns for a lot of Americans is that they're going to run out of assets in retirement, and it's a very real concern. So basically, what all these studies have shown is that if you incorporate home equity first or home equity as part of your retirement plan, your assets are going to last a lot longer. So, what a lot of times ends up happening is that people will exhaust all of their assets. They're out of money. So what do? They sell their house. Well, sometimes they'll downsize, but right now, I mean, if people are going to rent, I mean, my gosh, the rents are so expensive right now, and just like I tell my first time home buyers, if you're renting, you're still paying a mortgage. You're just not paying your mortgage. So, and that's the advice that a lot of these, financial gurus are giving people. They're out there saying, oh, well, if you're equity rich and cash poor, sell your house and just rent and live off the equity. I personally, I don't think that's a great idea because, you're basically telling them or, advising them to go into a depreciating asset, which is an apartment. Number two, you have to leave your home. And this is a lot of times people want to age in place. In fact, there's been several studies that show that if you do age in place, you actually end up living a lot longer. So that's one of those things as well. So there's different types of reverse mortgage loans. What the heck is a HECM? Well, a HECM is an acronym for Home Equity Conversion Mortgage, and that's FHA's version of the reverse mortgage. They're administered by HUD, and they come with certain protections for the homeowner. They have a non-recourse feature, so that means that you're never going to owe more on the property than what it's worth. FHA will come in and they will take a loss. If let's say we have a 2008 event, everybody's house values implode or a meteor hits the earth or whatever, and all the house values go down. And a lot of these millennials, there's 50 million millennials that are going to be entering the housing market here in the next 10 years. This is a study done by Freddie Mac, their quasi-governmental agency. I don't think we're going to have a big crash coming. I mean, the demand is just too high for housing right now. What I think will happen is that if rates go down, I think they're going to go down, probably not to the 2s or 3s, but when they do, prices are just going to balloon up again. So, a lot of these folks are on the fence waiting to buy. You don't wait to buy real estate. You buy real estate and then you wait. But so basically, it's got a bank failure security, non-recourse features. So there's a lot of protections with the HECM program. Well, we know this fella. This is our buddy Tom Selleck and his legendary mustache. He said the reverse mortgage is just like any other loan. The only difference is how you pay it back. Old Tom Selleck, he hit the nail right on the head, and it's exactly true. It's just like any other loan. It's got a monthly payment. However, the payment is optional. The bank doesn't get paid out on this loan until you exit the residence. So either through passing or going into a facility, or if you want to just say to heck with this and go to Costa Rica and live there. As long as you're not living in that property for 6 months and a day, they're going to technically you'd be in violation of the agreement. So they would ask you to pay the loan back. And just when that happens, let's say if you pass, your heirs are going to have 12 months to figure out what to do with the property. It's a very safe loan to be in, especially if things get worse than what they are as far as the economy. There's no better loan to be in. If the economy goes down and property values start to fail, no better loan to be in than the reverse mortgage because of its non-recourse feature. Let's move on here. We went over the two biggest myths. We're trying to keep this to a half hour, so we're running out of time. So we're racing through these last ones. We went over three different ways to structure the loan. So how is the qualified amount determined? Well, the age determines the qualified amount for each borrower. So for instance, someone who is 62 will be able to borrow less than someone who is 82. So that's all I got for you today. If you have questions for me, you can reach me at chariotreverse.com. Got all my information there. I've got some video testimonials. If you want to schedule time with me, you just go and click on the little button and it'll show you my calendar, and you just pick a time that works for you and it'll just pop right on my calendar there. So, or you can just pick up the phone and give me a call too. You know, that works too. You can reach me at our Colorado office at 720-502-3278. Boy, I sure should put that on the page there, shouldn't I? But you can get me at Chariot Reverse as well. Well, thank you so much for your time. I really appreciate it. And I hope everybody has a blessed day today. Thank you so much. And we'll chat with you next time. Thanks a lot. Have a good one.